Hi, good morning. It's Overo from Beta 2 in London. It's the 22nd of September 2011 time. It's currently 10:24. So yesterday, the risk markets closed down on the day. The trend lower was further exaggerated following the FOMC decision, where the Fed chose Operation Twist. This was expected by the markets, but was disappointing by not employing anything more substantial. More of this to come later on. Bunds, they closed marginally higher on the day, and the dollar strengthened substantially across the board. The weakness of high yielders also reflected the broad market sentiment over the day, and also following, essentially going forward for today. Now, in terms of Operation Twist, this was designed to push down longer-term interest rates by selling the short-dated holdings, i.e. less than 3 years, and investing in longer-dated bonds between 6 to 30 years. The market was really looking for further QE3 or an indication that this option was back on the table, but it got neither, and as a result, the US dollar surged across the board. So, for example, the Aussie dollar was down almost 2%. So what is the intention of Operation Twist? Now, the borrowing costs will be lowered for businesses and households via a decline in longer dated treasury yields. However, the US 10-year yield is already at 1.80%, so the downside risks look limited and short-term borrowing costs could well increase. So with bank balance sheets strained due to the spread from borrowing short-term and lending longer-term diminished, the fall in treasury yields will not be fully reflected corporate and mortgage rates as banks look after and protect their profit margins. So all in, this looks like going for a step in the right direction, but will it be enough to kickstart the US economy? Only time will tell. So turning to the UK, the pound is looking good for further QE. The minutes made it clear that Adam Posen will be unlikely to stay lonely for much longer in his votes for further QE. The minutes also showed that policymakers confessed that the debate on additional stimuluses was finally balanced with asset purchases the preferred option. Also discussed was a UK version of Operation Twist, as well as a potential reduction in base rates, currently at 0.5%. Now, the suggestion is that most MPC members regard additional QE as increasingly probable. Their confidence as well in the expectation that inflation will fall back below 2% next year also remains undiminished. Now, as a result, the pound dropped, briefly threatening to fall under 1.50. So troubling times ahead for the British pound. And turning very briefly to the Swissy. As a safe haven, the Swiss franc has been on the back foot. The S&B speculation is growing that its target is now 1.25 from 1.20, and further weight was lent by an advisor to the S&B, who claimed that the fundamentals suggested that the Euro Swissy ought to be between 1.30 and 1.40. So troubling times across the board. As always, for more information, news and trading views, please log on to our website www.beta2.co.uk. Beta2 experts in the Forex markets. Thank you and good day.